Welcome to the Daily Brief, where I'll go over the highlights for the action in the market for Monday, October 17th, and then go over the highlights for how things look for Tuesday, October 18th. And we had a pretty strong day. It was different than what we saw last Thursday, the big up day. That was led more by value instead of growth. And it was led more by the Dow than by the NASDAQ and NASDAQ 100, where in Monday's session, we saw growth really outperform, and we saw the NASDAQ and NASDAQ 100 do better. So that's how they're a little bit different. Now we need to see, can we capitalize on this? Can the market continue to move higher? We're coming into a more favorable season in the market right now. Doesn't mean that we're going to go higher, but in years past, based on history, this has been a more favorable time leading up to the election and then after the election. Let's go back and talk about what happened. Right at the open, we gapped higher, right at the open to above R1 at 36.70. As the day went on, we did drop below R1, but we were able to recover from that. We stayed above R1 for the rest of the day. So even when some weakness came in, buying came right back in and pushed prices back up. We ended up being up 2.65% on just barely above average volume. That is a little bit of a warning sign. The technicals, they're negative. We're still pointing down, but we're starting to see our oscillators cross over positive. We're starting to see us maintain prices above support. We need to see follow through. That's the real big thing right now. Some of our scenarios, some of our setups are showing some improvement, but if we have another down day, it's just going to take those out again. We need to see some follow through for more than just one day, as the markets are fixated on inflation and interest rates. Things in the UK, it looks like they met, and whatever they did over the weekend, the market liked that. And that gave a lot of support to the UK market, which helped the EU market, which then fed over into the US market. So what are some comments? Monday's gains were led by growth and the NASDAQ as well as the NASDAQ 100. And if we are going to go higher, it's going to be the NASDAQ and the NASDAQ 100 that need to really improve. They've got beaten down the most in 2022. If we're going to turn around and improve on things, they're the ones that are going to have to go up the most. And in the UK, they have a new finance minister after they axed the other person. What they said is, you remember that those tax measures that we were going to do in this little mini budget? Well, we're not going to do that now. And the market liked that. That's what really tanked things on Friday. They changed their mind over the weekend, and that helped their gilts, which are their bonds, and it also gave a lot of support to the British pound. That fed over into the EU session, which then fed over into the US session. We're still below the 20-period moving averages. They're acting as resistance right now. So we want to see, if we see follow through upward movement, can we get back above and then close above those 20-period moving averages? We still have a number of curves that are inverted, in the 10 to the 3 month. It's not inverted yet, but it's getting ever so close. Sentiment, we're not extreme fearful right now, but we are still fearful. We had the Empire State Manufacturing Survey that came out. It showed minus 9.1. The last time we got this, it was minus 1.5. Anytime you see a reading below zero, that shows that the economy overall is contracting in the New York area. Our trend is still negative. The ADX is going up. With these wild swings, the ADX is not quite sure what to do, but the red line is really declining. If we see follow through upward price action, that could help turn the trend, but it isn't doing it yet, and we're still above 20. Our bias, this time I did go ahead and switch it to positive. After last Thursday's action, I kept it at negative, mainly because I saw value in the Dow leading things higher, and that's not what you really want to see in this kind of an environment. Well, on Monday, we saw growth in the NASDAQ really lead things higher, so that there seems to be more guts behind it. But that could get all wiped out if we end up declining on Tuesday. Our momentum is still negative overall. We need to see more than just one day going up, or maybe 2 days in the last 5 that have been up. We need to see some consistent follow through to the upside. And then here's this headline that I posted. I'll probably do this until the Phillies either win or get knocked out of the playoffs. But the times when the Phillies have won the World Series, it kind of coincided with some pretty bad things happening in the economy, such as 1929, big stock market crash, 1930, Great Depression, 1980, not doing very good economically at that time, and then 2008 during the whole financial crisis. So we'll have to see. Now, is this just a coincidence? Of course it is, but it's just something interesting, and I think it's a little bit humorous. So I just wanted to show that to you. So what's our outlook then for Tuesday? We're negative still, but we're just a little bit above support. That 200-week moving average, that's pretty significant, and we are showing some improvement with the up day. We have industrial production and capacity utilization coming out. And then every week we get the housing market index. And then the whole list of geopolitical events, Russia, Ukraine, which is, again, escalating and things are not going good there. They're still more aggressive with trying to combat COVID in China. They're not doing full-blown lockdowns like they were before, but they're still trying to control that. And then earnings are really starting to come out right now. We may get some Fed speak. Is there anything else that's going to come out of the UK, or has that kind of settled for the time being? We don't really know those answers right now. So our scenarios, we still have to go with the down scenario because of all the headwinds, but you don't really want to jump in short because our technicals, they might be negative, but we're still above that support level and things could be improving with the up day. We can't really go with the positive scenario because everything is still pretty negative right now. We need to see more improvement from the technicals. We need to get above some moving averages, above some pivot points, above some fib retracement levels. We haven't done that yet. And we can't really switch over to positive until we see those things starting to happen. And it's really hard to go with the sideways, even though that's what it feels like we've been doing. Thursday big up, Friday down, Monday up. But with these wild moves, the ADX is still above 20. So it's still registering that we're in a trending environment and that is negative. But the red line is starting to come down, which could show some improvement. So our conclusion then, the S&P, it may be improving. How's that for decisive? We have to see follow through. That's what it comes down to based on the way I analyze things. The short term, we're above support and we are showing some improvement, as well as in the intermediate term. Long term, again, we're still negative overall, but we want to see some follow through here. That's kind of the name of the game right now. So thank you. Please feel free to check out the full-blown video. I go through all the charts. I look at the scenarios. I give you more explanations as to what's actually going on. In spite of that, have a wonderful day, and I will talk to you after Tuesday's session.